This is our Forex blog for January 25th, 2012. And like most days, we want to buy the strongest ones versus the weak and sell the weakest versus the strong. We also want to keep track of what the longer time frame trend is. In other words, the dollar, the daily trend was down until about 4:30. The weekly trend's down, the monthly trend's down. Real-time trends show up on the histogram, which is made up of 5 different statistical trend tools. 3 of them measure the direction, and 2 of them measure the intensity of direction. And new trends obviously begin on here, and then the daily trend switches, then the weekly trend, and then the monthly. And when you see a lot of strength followed by very little weakness, that momentum to the upside is likely to continue. You can see for the most part for the next 3 hours it does. But always be aware of what the weekly and monthly trend is. I focus mainly on the real time. The next most important is the daily, and then the weekly. If the weekly is in the direction of the real time and the daily, then your odds go up. But any new trend starts with this, then the daily trend switches, then the weekly, and then the monthly. And keep in mind the weekly trend can take 3 to 5 days of very strong up moves before it switches. It depends on how weak it was the previous week. If it was trending down but only moderately so, it could take 2 or 3 big strong up days to switch it. If the market was down 350 pips the previous week, it might have to go out 4 or 5 days the next week to change the weekly trend. So keep that in mind when you use this. But in a nutshell, the dollar was stronger than the yen today, and you'd want to be buying the dollar versus the weakest one. If the euro and also the pound is weak, I would prefer the pound simply because the pound, the weekly trend was just slightly up and it went down at 2, whereas the euro is quite a bit stronger. Try to pick the currency where the odds most line up in your favor. Now the dollar really wasn't strong until about 3 right here, and you can see the pound was weak. It has a little bit of strength right here. This is the kind of pattern you want. Extreme weakness followed by 1/2 to 1/3 visually on the counter trend. Currencies don't move up or down forever. So around 3:30, you're looking to sell the pound dollar. Here it is, 3. This one also has a nice double narrow range pattern right here. Anytime you have 2 narrow range patterns in a row, typically you're going to get nice trends out of it. So even before that, you would have probably looked to sell here. You would have got out with about a 6 pip loss there. You go short again with your stop right above this little swing high, and you would have actually been in this trade about an hour before it fell. But regardless, this Fibonacci area right here is likely to be support, and it was. When it finally broke through there, you can see our intelligent trailing stop caught the majority of this trend. Also, the previous day's low is a great place to get out of half your trade. Currencies that go underneath the 2.0 white containment band typically reverse, as you can see here, and the second time today it came down to the lower band. It didn't go more than 2 or 3 pips underneath there. So anytime you're in a trade and it's underneath the 2.0 band, wait for it to kind of stall and then put your stop over those bars high. This is one of the reasons why most of our traders have switched to range charts. Here's a good example of the range charts. It's underneath the band right here, and it went down to the previous day's low. The statistical weakness is falling off. It also hit the 3.0 containment band, which I have on all my charts when I trade, and some of my classroom charts I run just for doing class at. The 3.0 bands usually are the end of a move, and it's a perfect place to get out of your trade. Now later today, the pound showed some strength, and then the counter trend move had a little bit less weakness in the strength. That trend's likely to continue to the upside because the daily and weekly trend are up. So you wouldn't want to be buying the dollar again. You wouldn't want to be selling the pound dollar after that. Here is a good pattern in the euro. A lot of weakness followed by very little strength. 5:30 right here. You're looking to sell the euro versus one of the stronger ones, which is mainly the dollar. 5:30. It's a good currency to be looking for sells. Here's 5:30. The currency had a little bit of a 10-15 pip pullback. We have the previous week's high right here, which is a major support area coming down, but it broke it. That means there wasn't a ton of buying right there. When it went back above it and really couldn't bounce and come back up to the hourly, that's a good place always to sell, coming up to it from below. When it breaks down right here, you go short around 82. You always want to draw your fibs on the charts to have an idea of where to get out. And again, below the 2.0 band, good place to get out of this trade. Notice on the 6 pip per bar chart also, the 3.0 containment band usually is the maximum low a currency is going to do. So you can pretty much, if you see a currency's a few pips from this, or add it, touches it, or a pip away from it, get out of the trade, because usually that's the end of the move. There's no point in being greedy when trading. There's always plenty of other opportunities. It's a good place to get out at the 3.0 containment band. The New Zealand was also showing some weakness today, but keep in mind that this one also has a weekly and a monthly trend that's up. So if you take a trade in a currency that's weak today, but the longer time frame trend is up, be very cautious and look for any signs of it stalling at a resistance area. Obviously the dollar was strong today. You'd want to sell the New Zealand dollar. Here it went down with a lot of weakness. This is our trend line approach. You draw your trend line underneath the bar's low, and when it breaks, you go short, and you can see it came down. It's underneath the containment band, which, the previous day's low are trading zones down here. The 200-day moving average is right here. It's going to reverse somewhere down there, especially since the weekly and monthly trend are so strong. So follow this down and maybe put your stop above each bar's high, and you'd be out of this trade somewhere around here at 51. Short at 78, out at 51 for a 25 plus pip win. That's how you use the weekly monthly trend. If the weekly monthly trend were extremely down, then this could go underneath the lower containment band and continue lower. But when the weekly monthly trend are up, typically it's going to find support down here and then eventually later get a nice bounce, which you saw here.